More than 500,000 Canadians have so far taken advantage of some form of mortgage deferral assistance because of the COVID-19 pandemic. While it can be an important tool if you're in financial trouble, it comes at a cost. Everything Financial Group CEO Peter Cishecki joins us this morning with the true cost of deferring your mortgage. Peter, good morning. Good to see you.
Good to see you, Carrie. How are you doing?
I'm great. So let's break this down here, because people may think that it's a good idea to skip payments, but it's actually going to cost people in the long run. So break it down for us.
You bet. Skipping payments if you absolutely have to, I get it. It's between skipping payments or putting food on the table. But on a 20-year mortgage, that's about a $500,000 mortgage. That skipping a month, you can add about $18 to your payment. But if you skip about 6 months, you're adding $100 to your payment. But that's not the real at the end of the mortgage, because now you're paying interest upon interest, and that cost can be quite large. If on a 6-month deferral, you're talking adding $5,500 to the end of the mortgage. So instead of a mortgage being 20 years left on your mortgage and you skip 6 months, so you think 20 years, 6 months left, but that could be 20 years, 9 or 10 months left, almost adding a full extra year in some cases to your mortgage. And that's significant, and it's not a matter of you can't do that. You just need to know what that cost is.
Yeah, information is power, that's for sure. So if you can pay your mortgage, you should. What are some alternatives to deferring your mortgage?
Well, some alternatives are just paying the interest on your mortgage, so at least you don't have that interest accumulating. One of the most powerful mortgages out there, and it's not sold, it's not talked about very often, is a line of credit mortgage, or a HELOC is called, a home equity line of credit. And that's based on simple interest. And the calculation of simple interest versus compound interest is quite different. So you just can't compare the numbers. And those simple interest mortgages right now are down to 3.05% or even lower in some cases if you get special discounts. And you're only forced to pay the interest, and that can save your family a lot of money right now to allow you to still put food on the table.
Hey, Peter, what about if you're approached to renew your mortgage early? Is that a good idea?
Well, there's been a lot of this going on, Carrie, with people getting approached by brokers saying, hey, look how low the interest rates are. You should make the change now, lock in long term. Oh, the interest adjustment, as they say, or penalty, is only going to be this much. It's a while for interest rates to go back up because the economy is not going to rebound that fast. Look at 2008 when interest rates went way down, and then it took 8-9 years before we saw increases in interest rates. Hold tough, wait for your renewal, and don't incur a penalty just for the sake of chasing that magic number that looks really shiny and bright.
That is really good information. Good advice this morning. Peter Cishecki from Everything Financial. Thanks, Peter. Have a great day.
Thanks, Carrie. You too. Have a great day.